This is FinTech Futures at Sibos, and I'm joined by Lori Schwartz of JP Morgan. Lori, thank you so much for taking the time out to speak with us. Just to get started, let's give us a quick introduction to yourself and your role at JP Morgan.
Brilliant, thanks. So firstly, thank you so much for having me. I'm Lori Schwartz. I have the privilege of running the liquidity and account solutions business within the payments organization at JP Morgan.
To start with, I mean, given the current economic landscape they're in at the moment, what are some of the key challenges for businesses when it comes to their liquidity management then at the moment?
Yeah, I mean, it is definitely quite a time. And I think above all else, what every corporate treasurer across the world is thinking about is the cost of inefficient working capital is at an all-time high, right? High interest rates, high cost of capital, volatility. And so in general, I think there is just a huge focus on trying to create visibility, control, and optimization to really make that working capital efficiency.
Excellent, excellent. And what do you think businesses have learned then from this economic downturn at the moment when they're looking at their long-term goals?
Yeah. So overall, I think it's about kind of this realization that there's never a bad time for good liquidity management, right? So what does that mean is, and especially in the payments business where every single day it's about moving money, right? And as I like to say, every payment begins and ends with liquidity. So ensuring that you have liquidity, cash in the right place, in the right currency at the right time is paramount. And I think a lot of treasurers, especially as we saw different impacts or kind of volatilities introduced over the last couple of years, really found themselves asking the question like, where is my cash? How much do I have? And so visibility became paramount, and there was an absolute rush to cash over the last couple of years. So the preparedness of treasurers, treasury organizations to be able to best utilize their working capital in any environment has been an absolute priority.
And what kind of key advice then would you give to treasurers when it comes to their liquidity access at the moment?
I think a lot of this starts with understand the nature by which your company is using cash. So this whole push and pull of centralization, decentralization, independence and autonomy versus the benefit you get of kind of bringing things together within a centralized treasury function, there is a huge amount of benefit to be gained by that consolidation and centralization. So when we start a journey with any kind of corporate treasurer, we like to think about is how do we start to rationalize? And that word comes up a lot because in the payments business, it's short-term cash, it's making payments around the world, multiple currencies, countries, time zones. And so often what happens is there is just a proliferation of account structures. And so the sum of the parts is always larger than the total that's actually needed. So if you start with an account rationalization structure to achieve visibility, we find that's really the building blocks to good liquidity management.
Excellent, excellent. And how do these kind of skill sets then help treasurers add value to the business units they work with?
Well, it's really interesting because I think Treasury overall is on quite a fundamental change, right? So treasurers of the past have really been focused on management of the company's working capital, paying suppliers, paying people, accepting cash from sales and otherwise, which is all super important and remains as such. And there's a huge amount of solutions in the market that can help treasurers be efficient in that regard. But what's also happening is a lot of companies themselves, and it's kind of, the magnitude by which e-commerce and marketplaces have hit is that business models themselves are actually getting involved in cash. And that's an entirely different reality for a corporate treasurer. So holding and handling what we call as third-party monies is an enormously new part of any treasury. The connectivity back to kind of adding value to the business as well, if your treasury is not prepared to manage the flows and the money through like these marketplaces, actually the business enablement will be stopped. And so what we found is of top importance now is making sure that those treasurers are actually engaged and involved in those conversations as they're happening, because they're key enablers to business growth.
Excellent, excellent. And what kind of technologies and solutions in particular do you think companies can be looking to tap into to help with this?
So on the account side and with rationalization, I think we've seen a huge boom of virtualization. So what exactly does that mean is the old approach, if I can call it that, has been, I set up accounts for purposes, I retained independence and integrity of data by using accounts. And so hence that proliferation of accounts were created, which became harder and more difficult to manage. Technology has really become a huge boost to account rationalization. Why? Because by embedding a virtual account structure within a physical single liquidity position, you can actually retain all the information that is needed, but you get the benefit of that centralized liquidity position. That's just one. On the other side, I think the advancement of payments in themselves, so like all the real-time payment schemes, instant payments that are coming around, real-time payment means real-time liquidity. And so actually connecting the liquidity solutions, which, absolutely is happening in the market, to be able to move as fast and in anticipation of the payment, given those payments are now going 24/7 by 365, is just exceptionally important.
Excellent. And what has JP Morgan been doing in particular as well to help with this?
So our virtual solutions product set has been built. It's our market-leading VAM solution. We've also been adapting it to third-party monies, which is really where I think these solutions are going to kind of be a catalyst of growth for the companies. Also, we've continued to focus on what has been the age-old challenge for corporate treasurers, short-term cash forecasting. So our cash flow intelligence solution is really trying to pinpoint how do you help corporate treasurers understand their cash positions, aggregate a huge amount of information and receipts and payments that they're not always necessarily in control of, to try to optimize those cash positions in the short term. Why? Because freeing up working capital is probably the biggest top line to bottom line improvement that a corporate treasurer can do on a daily basis. Excellent. I mean, I by nature, I'm cautiously optimistic in life, and in the market as well. I think there's been a huge show of resilience within the U.S. economy, even at these higher interest rates and elevated inflation. You've got unemployment, I think, generally lower than most people would have expected at this point. I think we haven't seen the end of the interest rate cycle, so the risks that persist out there will continue, and every corporate treasurer really kind of needs to be asking themselves that exact same question: is what is the risk that is coming into my business, and how do I best prepare for it? On a positive, as I said kind of before, I think there's never a bad time for liquidity management. And what we absolutely found through the response in the global pandemic was corporate treasurers and companies that had invested in the virtual and physical and notional solutions really to aggregate and make best use of their own cash. They had a better starting point, and they were well equipped to handle shocks to the system. So, cautiously optimistic always, but I do think that the techniques are out there to help, and we're always here to help.
Excellent. Well, Lori, thank you so much for taking the time out to speak with us again. It's been a pleasure.
Great. Thank you so much.
Thank you.